we're looking at developing stories this morning. I want to bring in JD Durkin, contributor for Schwab Network. JD's taking a look at Intel. Intel under some pressure today, off the back of their latest results. Take us through the numbers and some of your takeaways.
Yeah, absolutely. Very much under pressure today. Currently, as you and I are having this conversation, down about 7% or so. And this despite the fact that it was a top line beat for revenue, a bottom line beat for earnings, a beat for computing revenue, as well as the all-important data center and AI segment revenue breakdowns. But Diane, as you certainly know, it's one thing to have a successful first quarter by the numbers. A different thing altogether when it becomes the situation of trying to forecast the difficulties for Q2, and that is really where I think the uncertainty lies for this company and the company's new CEO, Lip-Bu Tan. No easy task, and a lot of unanswered questions for the company. One of the big things that investors and analysts have been wondering are the sort of ambitions for Intel for its so-called foundry business, chip manufacturing, not just for Intel chips, but can the company ultimately pivot and be more of a provider for other companies, much in the same way that a Taiwan semiconductor is. And I think one of those big challenges for this new CEO coming off his first official earnings call with the company is whether or not he still maintains a path forward for that foundry business. But a stock that is flat to the downside year to date, down about 40% over the last 52 weeks, and down about 70%, believe it or not, from its 2021 highs. And then, of course, there is the general tariff uncertainty component about this. Yes, we certainly know that many computer parts and electronics have gotten tariff exemptions, but we can't forget that the Trump White House has also been very quick to say, well, not so fast. There might be semiconductor tariffs coming down the line. Diane, without a doubt, Intel would be one of those companies that you would certainly circle to see what those potential impacts are. And despite doing pretty well by the numbers, at least for the first quarter, we're certainly seeing shares under quite a bit of pressure in today's trading.
Yeah, down 7% today. Clearly the guidance matters, but not just the guidance, that word uncertainty, the fact that they used it on their earnings call really stood out, because I've noticed this earnings season, if that word comes up, it's almost like a trigger for the stock to be dinged. So you just can't even mention it. We already know Wall Street hates it. You can't even mention it. I see Alphabet didn't even mention it. They didn't mention the word of tariffs on their earnings call, so it's almost like those are the trigger words right now.
Yeah.
But we'll leave our. Oh, go ahead.
I was going to say, because they know how closely we are listening in for that word. That is the theme of the moment right now, and I think a lot of companies will certainly be referencing it moving forward.
All right, thank you. That's JD Durkin, contributor of Schwab Network.